Okay, Dido, can you go on here and explain what do we see in the market as we look at the information in the Wall Street Journal? I'm going to go back and see what you have in your computers. I want all of you to go to the Wall Street Journal website. And I want Dito to explain to you and me what is happening there. Before we go on, I want to make an announcement. Yesterday, November 12th, we had the second round of the competition for Federal Challenge at the Federal Reserve. The PMCC team, comprised of 4 people, Dido being one of the 4, was competing.
5 actually.
5.
5 team members.
5 members. After the competition was over, the 3rd winner was announced, and their heart went really crazy. The 3rd winner was the College of
Queensboro.
And then the 2nd winner was the
St. John J.
John J. or St. John's? St. John's University.
St. John's, yeah. St. John's.
And then the first winner was, and they had a chance either to be the first winner or not to be winner. And they became the first school in the history that won the first prize twice, 1 year after the other. We won the first prize again another year. That's the first time that any school gets the first prize in 2 consecutive periods, which means that we do have really competitive team. St. John is a good university. It's a second. Fordham is a good university. It's out of the stuff. Chinese to stand here next to me. And I want to know what is volatility. And Victoria says that is not there. But Virginia says, I will figure out. And Canis says, volatility is something that I learned in my statistics class. And Dido looks at his newspaper, and we go backwards in time, starting from Asia. And whatever is happening in Asia is that Asia is how many hours ahead of us? Depends. India, China, Japan, 10 hours. So in 10 hours in India, the markets are closed. So what do you see here? You see what is happening in Shanghai. That's China. The stock market in Shanghai moved up and down below a given line. What is the meaning of the red line?
The stock market haven't started yet.
What is the meaning of the red line?
Thank you.
This is something I want you to know. Then we click to Europe. Europe is a little bit further up. We see that the stock market is moving. And I want for Europe to go to Germany, the second index. And here again, the stock market is moving below a red line. What is the meaning of a red line is my question. And then we come back to the United States. We click the United States and we see again a red line. But we stay at Dow Jones Industrial Average and we see that the market is moving above the red line. What is the meaning of the red line? I'll tell you. Something. I gave you a first test. I didn't like it. I dropped it. I gave you a second test. I started liking it. It was not to the point that I was expecting. Today, I'm gonna send you your evaluation of the second test. We didn't send it to you before the third test because we didn't want you to know that you are not doing that well. We gave you the third test. Still, it's not at the level that I want you to be, but it's a significant improvement from the first to the second and to the third, and I'm focusing on that improvement. That improvement is going to move to your last test, and then we're going to have the final. Whatever you're going to do in the final is going to be your grade, except if your grade in the test is so good that you don't have to go to the final. That's not any case so far, but we have that particular case. So Dido, what do you see here? Dow Jones Industrial Average. And I want you to tell me, guys, what is the Dow Jones Industrial Average? Can you find out? You go on into your computer, go to Wikipedia, and you find out. Then I would like to know what is Standard & Poor 500. And then I want you to know what is NASDAQ. Not now when you go home. By Monday, I want you to tell me what is happening. So Dido, if you click this graph, and all of you, I want you to have this graph. I want you to go to the Wall Street Journal and click that particular graph, Dow Jones Industrial Average. You see it, the first page, then you click it. I don't see everybody to have it. After you click it, you see whatever Dido has. Then you click it again. And then you have this graph. And I want you to be able to find out what is this and how you will play with it. Then I go to Google Finance, and when I'm in Google Finance,
Yahoo or Google
I
Finance?
said Google. When I go to Google Finance, I want to see exactly the same information. I want to see the Dow Jones Industrial Average. I go to Google Finance and I want to see the Dow Jones Industrial Average. I don't see it in all of your computers. Adrian, move on to whatever I want you to do. You did. You're in the Wall Street. I want you to go to Google now. If you are in Google Finance, you see Dow Jones Industrial Average. And I want you to tell me what is happening there. Then I want you to go to your book. In your book, the chapter that talks about risk, it tells you something about horizon. And I want you to tell me on Monday what is the meaning of horizon. And if I'm in this particular graph, either in Yahoo Finance or Google Finance, do I find the time horizon? I want to go to Google. I can see it in Google. Do I see the same thing or do I see a different thing? And then I want to go to Yahoo Finance. 3 different ways of looking at the same thing. Yahoo Finance, Dow Jones Industrial Average. And I want in your computers to have all that case. And if I have that particular case, I want to see what is happening in the Dow Jones Industrial Average. You look at what is Dow Jones Industrial Average, and you see it here. Can you tell me what you see? And can you, in plain English, explain explain what is this graph. For the graphs, you need to know what is the vertical axis and what is the horizontal axis. And Valeria says the vertical axis has two things. One part is indicated with a continuous line that moves up and down. Another thing is at the bottom of the graph and is with columns. And these columns have different colors. And I want to know what is the information at the top that you see as a continuous line, and what is the information at the bottom. Yes, Andrea.
All right, so here we see the candles, the red and green, which called the bearish.
I don't see any candles there.
All the way down.
I don't see any candles there.
Candlesticks. They
I
call
don't
them.
see any candlestick there.
I know it's the graph, but
No,
down the
it's
graph.
not.
That's-
But if
yeah,
you
that's
want,
what's right now.
if you want, you can click something and you can
So I'm
be
trying
able-
to explain right now what's the meaning of the graph.
I know, but you don't explain the right thing.
But I'm just trying to start from the scratch, so everybody can know exactly what I'm talking about.
Correct. What is the top information that you see as a continuous line?
All right, so the top one is we have the increase of the stock, I can say.
Correct. At the top, you have the price index.
Yeah.
If you don't want to see an index, but if you want to see a stock, you go on and you look at any public stock. And if you want to look at any public stock, I would like you to tell me which stock do you want to look, or what kind of a company do you want to cover. Since I have an Apple computer and I have an iPhone, I would like to see what's happening with Apple. So Dido, how do I find out what is the variation of the stock price of any company like Apple?
So based off this graph, or do you want me to?
I want to see Apple there.
Apple, okay.
And all of you, I want you to go to another window, leave that window there, and give me Apple. You have three different alternatives. I will ask Dido to go to the Wall Street. And in the Wall Street, not in Google Finance, in the Wall Street, I want him to tell me what happened with Apple. Okay, Canice did it. And I asked Canice. Canice said that Apple is a corporation, that its stock price is traded not in the Wall Street financial markets, but is traded with technology companies that they all started in the 80s in a different market that is called NASDAQ. And whenever you have here, you see that Apple is indicated with 4 letters, AAPL. And it says that this particular stock is traded in NASDAQ. I want you to go to Wall Street Journal. And in the Wall Street Journal, I don't want to see the Russell 2000. I want to see Apple. Do you see anything that it says search? Now you're looking for articles that are about Apple. Do you see anything that says search? And I see what everyone has in your computers. I saw only 3 people who have Apple in their Wall Street. I want to see what is happening with the Apple stock. And have the Apple stock, here is the case. I want you to compare the stock for the last 3 months. Compare the stock behavior, stock fluctuation for the last 3 months. The last 3 months. I want all of you to go on and do it. I want you to compare the stock for the last 3 months with Dow Jones Industrial Average or with NASDAQ Index. Which one is the most appropriate thing to compare? And Adrian is going to say with the NASDAQ Index, because Apple is traded in the NASDAQ Stock Exchange. And I want to see if Apple is doing better or worse than NASDAQ Stock Exchange. And someone told me that you guys are better than me in computers and technology. And if you're better than me in computers and technology, I want you to go on and do the same thing in 3 different areas. In Google Finance, in Yahoo Finance, and the Wall Street Journal. I don't want to be in Yahoo Finance now. I don't want you to be in Google Finance. I want you to be in the Wall Street Journal. And I want you to have 3 months, not 1 year, for Apple. Dido,
Yeah.
3 months. Relax, focus, and see how you will change the time horizon. I want to have, good. Now I have what is happening in 3 months. And if it's happening in 3 months, I want to see what is happening with the stock price. And what Dido says here is what is happening with the stock price. The information you have at the bottom, but here are all black, in other areas are green and red, indicate not whatever Adrian said before. What did Adrian said before? He said about the candle. He said about candlesticks. They do not indicate the candlestick, but they indicate the amount of stocks that we exchange as purchased and sold, and we call it volume. In other words, we have how many stocks were purchased and sold in such a way that we will have the price change. Now, Adrian is doing the same thing with his cell phone. I want you to go on, and you go home, and you do it with your cell phone. And if I want to make a comparison. So I want to compare and see what is happening with Apple and find out Standard and Poor 5, not Standard and Poor, NASDAQ. Is any way that I can put in this graph NASDAQ, so I can see who is doing better. In other words, I want to do here, for the 2 things, what I do in my life. I teach the same class at 9 o'clock and the same class at 9:30, and I want to see which class is doing better. My morning class or the late morning class, or the afternoon class, or the night class. I see your computers, and I want here to see what is happening. I see John has something to compare, but I don't see anybody else to have something to compare. And I want to know what is happening if I want to be able to compare. Is any way that I can compare it? And put NASDAQ together with Apple. And I want eventually to do in Google Finance and Yahoo Finance, but now I want to do it in Wall Street Journal. And what you see here, you see another case. And you see one line to indicate indicate what is happening with the index of NASDAQ market, but I don't see in mislead this part, but I see it in Mr. Lee. And I see what is happening with one stock and the market that is that stock. And I want to see what happened with that stock and the stock of another company. And if I want to see another company, let's pick up to see what's happening with a company that is in the same field, like Microsoft. Christian, why you are late?
Sorry, I was having a personal issue that I couldn't do.
Okay, he's gonna tell you what we missed.
Thank you.
So what do you have? You have now two companies, and you have the market. And I want you to be able to explain. So what do you see? You see the brown and the blue to move in a similar way. Correct, John? Do I say what I see?
Yeah, I'm just trying.
I see the brown and the blue to move in a similar way. I need to know what is the brown and the blue. But I see the brown and the blue in that period to move in the similar way with the market. But after that, the black to go above the brown and the blue. And I would like to know how to evaluate that stuff. As long as I know what is the black, the blue, and the brown. And one thing that is here is something that the book doesn't tell me. And that is a simple moving average. And I want to know what Adrian said. I go back, Dido, and I would eliminate Microsoft. I go back and I eliminate the NASDAQ market. I keep only the Apple. And as I keep only the Apple, I don't want to look at it for the last 3 months. I would like to look at it for the last month. I change the time horizon. And as I change the time horizon, now I want to see what he was telling me. Adrian said something about candlesticks, right? What is a candlestick? Can I find the candlestick there?
Yes.
Is there any way that I can find the candlestick, and I will represent that part with a candlestick? Okay, I want to see it in your computer. I want to see it in your computer. I want to see what is happening. If I want to look at candlesticks, here you cannot do it. You need to click it to go to advanced chart.
But
In Wall Street Journal, it gives you advanced charting. If you get advanced charting, then you can be able to have things displayed. And my friend here found that he can display things in a candlestick. And I want you to do it in the Wall Street. Do I have anything that says display? It says display frequency, and then displays how it's done. Displays a candlestick. And then it says display daily. And I have here in a month. And I want automatically to change the situation and display things every week. I want to display things week by week in a month period. Can I do it? And I have the information that is here. And whenever you see the candlestick, some of the candlesticks are green and some others are red. Candlestick, man, candlestick, candlestick. You have a candlestick. Now change it to the daily. Go to Wall Street Journal. It says frequency, it says display. Display candlestick. And now you have a candlestick. If you have a candlestick, I want you to tell me what is a candlestick. Good. Yes.
It's representing like fluctuation income for that stock.
Correct. And unlike me, that I have to read the book and find out what is happening, you have a computer in front of you. And it does stay there. And if you have a computer, you bring it here, and it tells you what is happening. You go on, and you have a display, and you see what is happening. And as you have it here, you can be able to have what is going on with the candlestick. Yes?
So, for the candlesticks in the chart, the red would represent decreases and greens would represent increases?
Decreases of what?
Decreases of
Yes.
money.
Okay.
Basically, the line in the middle represents like how high or low the money goes, but where the green like actual bar is the highest the amount got to.
Good. So I have either a green or a red rectangular. And the basic rectangular gives me a range between two prices within a particular period. So what I have is I look at what is happening for that particular period. Is the period daily, weekly, or a different period? If I go on and I want the display for the last 5 days, I change my time horizon. Can we go to the last 5 days? The last 5 days, I see that the price goes up and down. And if we're at the last price day and we go on the candlesticks, we can be able to have the frequency of the candlesticks. Automatically now the frequency is for every 5 minutes. Can I change that frequency? And I have options. Can I have it for hours?
Yes.
And if I have it for hours, I see what is happening hour by hour for every day. This is 1 day. 1 day they have so many hours. And in every hour, the price is going up and down. And I have mainly 1 day to be evaluated, all the prices of the day in 4 numbers. If I want to change the case, I will go to the display and I'll have a different display. Now, I'll do a magic. I'll hit down as Adrian said, and instead of seeing candlesticks, I'll see what alternative do I have? A line. And I have a continuation of the line. I see that part and I see how the prices change. The price starts from here, November 7th, and ends up here. And whenever the price ends on November 7th, starts for November 8th, and ends up here. And whenever it ends November 8th, it starts November 11th, and ends up here. What is happening from November 8th to November 11th?
Weekend.
It's a weekend. So we do not have information for the weekends, and we don't have information when the market is closed. And the market is not closed around the globe exactly the same days all over the place. In other words, whenever it's July 4th here, we don't have the market open. But the rest of the work is working. But when it's Bastille Day in France, we do not have the market open in France. We have the market open here. Whenever we do market comparisons around the globe, we need to pay attention to what is happening with the time, because the time is not always exactly the same. So what do I have? From November 7 to the end of November 7, the price went up or down? The price went down, which means the opening price was higher than the closing price. The price went down. If the price is down, if I represent that information in a candlestick in a daily frequency, it should give me a red candlestick. Do I get a red candlestick? Daily frequency. I see. Yes?
Right, so because you said open and close, as far as I know, it's another thick candle on top.
We are going to go to that.
Oh, okay.
So what do we have here? What is this color?
Green. Looks like green.
That looks green to me.
Hmm?
Green.
If the color is green, then the opening and the closing price have exactly the different order. In other words, if the price goes up from the time that we open to the time we close, the candlestick is green. If the price goes down from the opening to the closing, the price goes down, the candlestick is red. And then we have a few other things. We have some lines that they go up and down. It's easy to see it if we have shorter measurements for frequency. If we go from the daily to the hourly, can we see it? Daily to hourly, what do we see? And now we see it clearly. The price at the end of the day is definitely higher than the price of the end of the day. It's not much difference. During the day, we have hours that the price is going on from the beginning to the end of the hour. But we have also hours that the price is going down. And then we have some lines. We have one line that is below the point, and we have one line that is above the point of the rectangular. These are the extreme lines. This is the high, and this is the low point of that price within that particular time period. What we can do, we can change the time periods. Computers today automatically adjust the periods that we have based upon what we would like to look at. If we like to look at information as it is here, dailies, we have a different case. What we can be able to do, we can change the time horizon. We can see all the data that are available in electronic form. We click and we get all the data. Or we can have a shorter period. We can see what's happening to the last 10 years. And we can have it and see what's happening to the last 10 years or the last year. Or from the beginning of the year, January 1st, to the current day. Or what happened for the last 3 months. So on, so forth. And we can be able to see what is going on. If you go to Google, you can see the same thing. If you go to Yahoo, you can see the same thing. Different companies use different technology to have the same stuff. If you go to Yahoo, as you are right now, you see that the bottom information, the volume, is presented in two colors, green and red. When it's green, indicates that the price is going up. When it's red, indicates that the price is going down. And I have a question. This is green. What is happening to the price here?
Peaks.
It went up a little bit. It peaked. Then we have red. What happened to the price here? It declined. Then we have green. The price comes up. Usually, when we have a lot of action, we see the action in the bottom line, how much is the trade, the prices may change significantly. That's not always the case. Is this clear?
Yes.
And I go now to the other case. I go to CUNY first, and I look at everybody's record. And everybody who is here says that you passed Introduction to Business, right? And I take any book in Introduction to Business, and it has one chapter that tells me that you know how prices change, or why the prices change. And I want to know why prices change.
Inflation with deflation.
Supply and demand.
Yeah, supply and demand.
Good. You have a supply and demand. And the supply and demand determine what is happening with the prices. When I was a student, I was turning on the radio in the morning, and the government was saying what are the prices for that day of all the products that we could buy and sell. We didn't have free economy. Was the case like this in Ukraine before you were born? But after you were born, the prices changed. And you told me two answers. Christian said supply and demand. What did you say? Chakwaka said?
Oh, inflation and deflation.
Inflation and deflation. Who is right and who is wrong? Sasa. And Sasa is right. They are both right. And I want to know what is the meaning of inflation or deflation, and what is the meaning of the supply and demand, Chakwaka. What is inflation?
Inflation is a situation whereby prices of goods and services go high.
So inflation is when the prices are going up. In other words, I look at today's the Wall Street Journal. First page, I see that one company files for bankruptcy. Which one is this company? Do I have anything here about milk? The largest milk production of the United States today files for bankruptcy. And my question is why? My question is why? Yes.
Probably because a lot of people are switching from dairy to other like milk sources like soy.
Correct. My son at one point was allergic to milk. My nephew is allergic to dairy products. Therefore, they do not eat anything that has dairy products. What do? Go down to see the graph. Do we have any graphs? Stay here. What is happening here? I want you to read the article. Do I read the article? No, I don't have the time. I go very fast and I see what is happening. And what do I see is going on here? I see that from 2015 to now, the milk products are dropping down. In what? In billions of sales. I see that the cow's milk is dropping down in millions of dollars. Do we produce more milk or less milk?
Less.
We want to produce less, but if they're,
The last several years, from 2015 to 2019, the sales of milk went down.
they're,
And the question is, do we produce more milk or do we produce less milk?
you would want to produce less, but if they filed for bankruptcy, I doubt they did, because they expect.
And I'm not talking about this company, I'm talking about the United States.
We want to produce less.
Okay. Are you gonna have Greek yogurt for lunch? When I go on and see people, do I see more people having Greek yogurt the last 5 years or the last 20 years?
5.
How much milk do you need to make a gallon of Greek yogurt? More milk than to make a gallon of regular yogurt or less? Hmm? What?
Definitely you need more.
And he is right. How much more?
A lot of them.
How much is a lot more? 2 times, 3 times? And why you need more milk? Because you strain the yogurt. And as you strain the yogurt, the liquid that is oxy goes out, and the milk is in a different content. You need more milk. In order to make more Greek yogurt, you need more milk. More milk means more cows. More cows means higher level of production. Higher level of production means lower prices. Lower prices means that these guys don't make that much profit. You switch from one product to the other and you have a case. Good. Now I have a real life test. Do you drink milk?
Yes.
Do you drink coffee?
Yes.
If you don't, I don't drink milk, I drink coffee. Is for the last time that you remember prices of coffee and milk, the price the same. Yesterday, my friend, Professor Peter Hoodis, came to my office. He looks at my coffee parts that I have, and he said, "Oh, you drink Illy coffee." I said, "Yes, that's the best." He says, "That's very expensive." Why it's expensive? Because it's the best. Why do I buy it?
It's best.
Why don't I buy Lavanza coffee, that I have it also? It's not that strong. So I have to think, if I want to buy something, what do I want? I want to consider the price of the product, or I want to consider the quality of the product, or both.
Oh.
You're right. And you go on to another thing that you eat. Sasa wants to buy bread so she can make a sandwich for lunch. And we go to the same type of a bread that she used to buy from the first time that she remembers. First day going to elementary school to now that she goes to the college. Between this particular period, we have 12 years. She buys exactly the same bread. She buys Paper Farms bread. What kind of bread? Because not all the Paper Farms bread, which is on the expensive line, is exactly the same. What kind of a bread? Whole wheat. There are 2 different types of whole wheat Paper Farms bread. Which one do you get? The honey whole wheat. Now we are specific. The honey whole wheat Paper Farms bag of bread for the last 12 years has exactly the same price, or its price went up or down? and why the price went up.
There's more demand for it, 'cause it's better quality product.
One is that there is more demand for it. Now I have a question. What is demand? Yes.
How much do people want of a certain product?
That's what she said. There is more demand for it. What else is there?
With more demand, you can raise the price because people want it regardless.
And what do I want to do? I want to go to the previous chapter that the book talks about inflation, and I want to couple weeks before that I talked about inflation. So what is inflation? Dido, in order to prepare for the Fed challenge, he had to deal with inflation. And when he had to deal with inflation, I don't remember, was this class or another class? That we had to talk about not the consumer price index, but the producer price index or PCI. PCI. We have three different ways to measure inflation. One is the consumer price index, the other is the producer price index, the other is the personal consumption
Index.
PCI or PCE?
PC expenditure.
PCE, you didn't learn it yet, although you're the winner. So, personal consumption expenditures, three different ways to do with inflation. They measure things in different cases. You go on and you find out what is an inflation index. All of them are indexes. What's an inflation index?
That is an index that shows how the prices are going up.
It's a basket of different commodities that you put in that particular index. And in that basket, you put different things. The consumer price index puts information about what the consumer buys. But the producer price index puts information of what we producers are buying. And the personal consumption expenditure puts information what we use for personal use and only to consume. And here we're talking about expenditures. Here we're talking about index. So what is in the index? In the index are basic parts. What is the basic thing? Sasa and me have to have milk in the morning. So we buy milk. And we want to have bread in the morning. And she buys bread when I make bread. And we want to see what is happening. And as we discussed, Sasa says, the price of bread really increased a lot the last few years. And I say, and the price of flour really increased a lot the last few years. But in order to make bread, I need yeast. But the price of yeast did not change that much. And in order to make bread, what else do I need?
Flour.
Flour. The price of flour changed a lot. The price of yeast did not change that much. What else do I need to make bread?
Butter.
No, I don't need butter. I can put butter if I want to.
Wheat.
I need wheat to make flour. Eggs, you put it only if you want it. What's the basic ingredients for bread?
Energy.
No, energy.
Water.
Energy, yeah, you need to bake it.
Water.
Water. Did the price of water change for the last years? And if I don't want to put water there, but instead of water I want to put beer and use a different recipe, did the price of beer change a lot? and I want to see what is happening with the prices of commodities that I use for consumption. And I have basically, from all the commodities, one group that is important. That's what I need to eat, food. And the price of food is increasing a lot because of reasons. And I need certain other things. And that's energy. What's the weather today? Cold.
Yeah.
What do you need to do? You turn on the heat. You increase the thermostat. You use more oil. Or you use more electricity for heating purpose. What you have the core inflation, what you have, and more important, they have two groups, food and energy. From that food, you can find out something else, what find with the milk price. And then if you look at the inflation index, will tell you how much each one of the commodity changed from one period to the other. And the period you start, you call it base period. And the period that you end today, you see what's happening. So what is today? Wednesday. By next Monday, I want you to find out and give it to me before the class starts how, let's say, the price of milk changed as the price of milk in the inflation index. What is this? This is one part of the price that comes because he said we have inflation. Inflation means how much the price is changing. And this price that has the inflation inside of its component is the nominal price. This price is the nominal price. If I take the inflation pressure from that particular price change, then I have the real price. Not that the nominal is not real. The nominal is the price that I have as I count the price changes of that product. But the real price is if I take inflation out, and then I see what is the real increase of the price. Not the price aspect of the component, but the real price of the component. Like what? How much do I pay for the metro to get from Penn Station to Park Place? When I did this same ride the first time, I had to pay for a quarter. When a friend of mine did the same thing, had to pay for a penny, which means the price changed. But I want to see how much is the real increase of price and how much is the inflationary pressure to the price. And that's one aspect that I have here. Then I go back to Christian. Christian didn't say that the price changed because of inflation. Christian said that the price changed because of supply and demand. Doesn't matter how many people travel, the price from Penn Station to come to Park Place changed. Is this because more people take the train from one place to the other, less people take the train, or the price went up or down? And this is what I want to do. Which means I need to go back to the basic thing that I have here. And I will turn off that part. Give me a minute. And all of you told me, now I'm testing you, that you passed Intro to Business. Right, Sasa? Good, she's smart. She never took that class. I didn't know took Intro to Business either. I didn't took finance either. So, you passed that class. In Intro to Business, you learn how prices are made because of demand and supply. and I want to see how I will do it. I have mainly two things to relate: prices and quantities. And I want to find out what is the relationship. And I go back and I check your record again, and Kaniz says to me that she is taking calculus right now. And before she took calculus, she took algebra. And when she was in an algebra class, she learned that we have a functional relationship, right, Kaniz? And in a functional relationship, you have x and y's. And you call the x independent variable and you call y dependent variable, because if you change x, y is going to change. And you place in the horizontal axis the independent variable, and you place in the vertical axis the dependent variable. And you see how things are related. And now I want to see what is the dominant relationship. The dominant relationship that I will change the price and affect the quantities, or if the quantities change, the price is going to be different. And today is Wednesday. In Greenwich Street, I have a markets farmer. And I want to go on and see what do they sell. And I go in the morning, 8 o'clock, before I get here, and I finish my class at 2 o'clock, and I go after my last class to the farmer's market. And I want to see one particular item. What's the item? A given type of an apple, specific type of an apple. What apple? Macintosh. I go to the guy that sells Macintosh in the morning and in the afternoon, 8 o'clock and 2 o'clock. He sells 2 o'clock at the same price that he sells in the morning, at a higher or at the lower.
Lower.
I go 8 o'clock in the morning. I go 2 o'clock in the afternoon. Same thing. She likes Macintosh. Macintosh apples. In the morning, 8 o'clock, in the afternoon, 2 o'clock. Do they have the same price?
Yeah.
She says, yeah. Then I go on to the other case. He wants salad. What kind of a salad?
Caesar.
Caesar. What do you need for Caesar salads?
Fruit salad. Bread.
And what kind of vegetable?
Lettuce.
And what kind of vegetable?
Romaine lettuce.
Romaine lettuce. Be specific. 8 o'clock in the morning, 2 o'clock in the afternoon. The romaine lettuce is exactly the same price or different price. And I go to the lady who is a businesswoman. Are the prices the same or different? I go to the markets farmer in the morning and in the afternoon, and I want the very specific thing. When do I buy it? In the morning or in the afternoon? What happened to the price? And I want you to know it. I want you to review it. I want to put the supply and demand curve. Which graph do I use? This one or this one? The earlier class gave me the wrong answer by majority of the votes. But they were wrong, most of them. Which graph do you select? If I want to have a demand graph, how do I graph my demand? And why? Is this a demand curve, or is this a demand curve? Or can be both at different cases? Can it be both at different cases? Can I have a demand curve like this, bent to the top? Have you seen it in a book? No. Can you see it in reality? And I want you to review that information from your Intro to Business class. I want you to find out how you get information about inflation and see what's about inflation, I want you to go on to Google Finance, Yahoo Finance, and Wall Street Journal and see how you will get information about the stock market valuation, and we'll put it together next time. And